All right, well, good afternoon, everybody, and welcome to our end-of-day market review for November 3rd, 2011. My name is Jason Waugh, and I am one of the trainers and success coaches here with Diligence Works. I'll be walking you guys through today's presentation. Just to quickly get into our agenda, you're going to see that we're going to be covering a few things, which are going to include the daily news. We're going to be looking at the news as a whole and seeing what it's doing to drive the markets in the direction that they're being driven. We're going to look at the market outlook, which is going to include analysis on the S&P 500, where we'll be looking for support and resistance levels. We're going to be looking at the MACD to identify where the MACD is currently sitting in its 6 different market sentiments. We're going to be taking a look at the volatility indicator. With this tool, we'll be able to identify if the markets are volatile and aggressive or if they're more laid back and conservative. There's one stock, last time I checked, on the basic watch list, which we'll go ahead and take a look at. Excuse me, but there was nothing from yesterday that stood out to us as a worthwhile pick. So we're going to be fast-forwarding past that and closing by taking the news, the S&P 500, and the volatility indicator and decide what we're going to do when we kind of piece all of those puzzles together, or all the pieces of that puzzle together, and decide if we're trading tomorrow, even if there is or isn't a stock on our watch list. So with that said, I'm just going to go ahead and jump right into the news, and I'm just going to be pulling up Yahoo Finance. So we can see that there's been another day of growth, and it's been going on around this whole Greece crisis and whether or not they should separate themselves from the euro or whether or not they're going to try to stay connected in there. Today things were looking more optimistic. Certainly I encourage you to go ahead and read that article in more depth after the session, but right now most of our focus is on Greece and whether or not they're going to be severing themselves from the euro. Moving in and taking a look at the S&P 500, you'll see that we've got a 1-year chart and we've got some various lines drawn here. What's most important though is to see that it is currently right up against a overhead resistance. And this line is basically a channel support level from a cycle low back here in June. What we're going to be looking now is to see it break up beyond that line and hopefully have enough steam in it to work itself back up above that falling trend line, which is located right here. If we can have that, we're really starting to trade in new territories, and it would be nice to see that it happens, that breakout happens at the same time as it breaks out beyond this cycle high right here. The MACD is now rising bullish again, though it's important to note that the black line has not crossed through the blue line as of yet. But I'd have a pretty good feeling that if that black line does cross the blue line, it'll happen at the same time as it breaking through that channel resistance. All right, and what we have now is our volatility indicator, symbol VIX.X. And what we're doing here is we're analyzing and deciding if the markets are bullish, if they're aggressive and volatile, or if they're more laid back and conservative. The way that we make that decision is by looking at the value of the current volatility indicator. And currently it's sitting at 30.50. Anytime that indicator is above 30, it would be considered to be volatile. Basic customers, that probably means that you're going to be sitting out on the sidelines or waiting for that indicator to get back down below 30. Advanced customers, you might end up trading, but you're going to be trading more conservative, smaller lot sizes and going for more conservative, smaller profit targets. All right, and let's see if we still have any stocks on our watch list on the U.S. side. So Triple L. All right, so what we've got here is we've got nice white candle, although we can see that the black line has not crossed up above that blue line as of yet. Volume is also decreasing, so I'm not seeing a lot of comfort in that. Just going ahead and clicking on my Draw Trends tool. We've got resistance right here. So I'd say it's also right up against overhead resistance, which means not going there. Not trading this guy doesn't make any sense. As I mentioned yesterday, there's nothing that showed up on our watch list that made any sense from yesterday. So we're just going to go ahead and close this all together. Let me bring up our slide for that. All right. So we know that the markets themselves have been pretty good the last couple of days, though they haven't been as good as they were bad the 2 days prior to that. We are up against overhead resistance, which is suggesting that we take it easy tomorrow and see what happens with that breakout. There is no statutory holiday tomorrow, so we're free and clear there, though we are going to want to keep an eye on any earnings reports or economic reports that will be coming out today or tomorrow. The volatility indicator is currently above 30, which means the markets are too volatile for our basic customers, or at least our new basic customers, while our more seasoned basic customers or advanced customers might find some trading opportunities. There's nothing on our watch list anyway, so our basic customers are pretty much without a pick. And then finally, because that indicator is so high and above 30, we can expect that the pre-market news and futures is going to play a large role in how the rest of the day goes. As a result, we're going to keep our eyes very closely fixed to that news and make our final trading decision once that is said and done. So with that said, this has been the end of day market review for November 3rd. If you have any questions, please don't hesitate to give us a call at the number below, or you can send an email to Ideal Trading Lifestyle as well. So with that said, have yourself a good rest of your day. We'll chat tomorrow. Talk to you guys later.